Since the Bitcoin protocol has a built-in mechanism to help manage the supply and demand of the digital currency, the halving of the price of Bitcoin is an important event in the world of cryptocurrencies. It is a method of lowering the payment made to Bitcoin miners for confirming a blockchain network block. In the Bitcoin community, this procedure is highly anticipated and occurs around every 4 years. The purpose of the planned Bitcoin halving is to guarantee a consistent quantity of Bitcoins on the market and avoid inflation. In this video, we will delve deeper into the concept of Bitcoin halving, its purpose, and the impact it has on the cryptocurrency industry. We will also talk about the relevance of the impending Bitcoin halving and what to anticipate from it. Before starting, don't forget to like and subscribe to our channel for more future updates. What is Bitcoin halving? A built-in mechanism in the Bitcoin blockchain called Bitcoin halving lowers the mining reward that is awarded to participants who solve challenging mathematical puzzles and validate transactions. The enigmatic architect of Bitcoin, Satoshi Nakamoto, put the system into place to manage the amount of virtual money in use. To put it another way, the process known as Bitcoin halving involves reducing the quantity of new Bitcoins that are released into the market, guaranteeing their scarcity and boosting their value over time. Like gold, which increases in value as it becomes harder to find, Bitcoin's value is derived on its scarcity. We must first look at the Bitcoin mining process in order to comprehend the idea of Bitcoin halving properly. Bitcoin mining. Verifying transactions on the Bitcoin blockchain network is called mining. It includes employing sophisticated computer hardware and software to solve challenging mathematical problems. Bitcoin miners operate strong computers, referred to as nodes, that use algorithms for transaction approval and verification in order to build blocks inside the blockchain network. With each successful block uploaded to the blockchain, miners are rewarded with brand new Bitcoins. The main goal of implementing mining was to guarantee that Bitcoin transactions were validated via a safe, decentralized network. In order to avoid fraud and preserve the integrity of the blockchain, Bitcoin miners serve as the network's security officers by confirming the legitimacy of transactions. The process of Bitcoin halving. As previously indicated, the halving of Bitcoin takes place automatically every 210,000 blocks, or about every 4 years. The block reward was halved for the first time in 2012, going from 50 Bitcoins to 25 Bitcoins. In 2016, there was another halving that reduced the block reward from 25 Bitcoins to 12.5 Bitcoins. In May 2020, there will be a third halving that will lower the block reward from 12.5 Bitcoins to 6.25 Bitcoins. The block reward is automatically decreased by 50% when the number of blocks hits this predefined threshold. Stated otherwise, the mining reward is divided in half. This procedure will keep on until all 21 million Bitcoins, the maximum amount, are in use. There won't be any more Bitcoins generated once the final one is mined, and the sole payment for mining blocks will be transaction fees. Why does Bitcoin halving happen? By reducing the amount of Bitcoins in circulation, the halving of the cryptocurrency aims to manage the pace of inflation. Every 4 years, there is a drop in the quantity of new Bitcoins issued, which slows the pace of inflation. This procedure will keep on until all 21 million Bitcoins, the maximum amount, are in use. Economic considerations underpin the idea of the halving of Bitcoin. A decrease in supply coupled with a sustained demand for the asset results in a rise in its value. It is anticipated that the scarcity of Bitcoin will increase its value, making it a more alluring investment option for investors. The impact of Bitcoin halving. The halving of Bitcoin has a big effect on the cryptocurrency market because it changes the dynamics of supply and demand. It is anticipated that the value of each Bitcoin would rise when the supply is decreased. The price of Bitcoin was significantly impacted by the last 2 halvings, and many observers predict that the next halving will have a similar impact. Since Bitcoin was still in its infancy and not well known, the initial halving in 2012 had little effect on the price of the cryptocurrency. But the 2016 second halving, which came at the same time as more people were using Bitcoin and more media coverage, had a significant effect on the price of the cryptocurrency. Following the second halving in July 2016, the price of Bitcoin shot up from about $600 to over $20,000 in less than a year. The Bitcoin community is eagerly awaiting the third halving, which many believe will have a comparable impact on the price of the virtual currency. After the next halving, some experts think the price of Bitcoin might hit $100,000, while others think it could go much higher. It is hard to forecast exactly how the halving will affect things, but a lot of things, such developments in technology, current affairs, and market mood may affect Bitcoin's price. Possible scenarios of the next Bitcoin halving. The second Bitcoin halving is scheduled for May 2020, and a number of things might go wrong. The following are potential possibilities that may take place after the subsequent halving. Bull run. A bull run happens when an asset's price rises sharply and quickly over a short period of time. A bull run in the context of Bitcoin occurs when the virtual currency's price sharply rises after the halving event. This scenario is predicated on past halving occasions, during which there was a notable increase in the price of Bitcoin. As a result of the upcoming halving's potential to lower the supply of Bitcoin and stimulate demand from new investors, several analysts predict that the cryptocurrency may see another bull run. Should this come to pass, the price of Bitcoin may reach new all-time highs, making it a very lucrative investment. Stable price. Another possibility is that after the halving, the price of Bitcoin stays constant. According to this scenario, the market has already factored in the halving event, and there won't be much of a change in demand for Bitcoin. The price may fluctuate somewhat, but the total value may not change. This is a less probable situation since the Bitcoin value is seen to be positively impacted by the halving event. Bear market. When an asset's price falls sharply and investor confidence is low, a bear market is created. A bear market for Bitcoin would result in a drop in the value of the virtual currency after the halving occurrence. Given that the Bitcoin price has been known to rise in response to the halving event, this scenario is often seen as improbable. On the other hand, outside variables like new rules or unfavorable press might trigger a bear market. Consolidation. According to a consolidation scenario, after the halving, the price of Bitcoin may stay within a certain range. Under these circumstances, the price of Bitcoin would remain mostly steady and would not significantly rise or fall. Consolidation is sometimes seen as a sign of market stability and may suggest that Bitcoin has matured to a certain extent. Conclusion. The second Bitcoin halving is scheduled for May 2020, at which time miners will get a block reward of 6.25 Bitcoins instead of 12.5. Due to the increased demand for the cryptocurrency brought about by the limited supply, this occurrence has traditionally resulted in a large spike in the price of Bitcoin. It is crucial to remember that past performance does not guarantee future outcomes, and there is no assurance that the effects of the next halving would be identical to those of the prior ones. Many analysts think that the impending halving might be a significant turning moment for Bitcoin and the cryptocurrency sector as a whole, despite the uncertainty. Because of the lowered block reward, there will be less new Bitcoin entering into circulation, which will make it a more precious and rare asset. This might cause a big price spike in the next years, along with rising interest from institutional investors and more worldwide usage. But it's also critical to take into account any hazards and difficulties that the Bitcoin halving could provide. Smaller players may find mining less lucrative as a consequence of the lower block reward, while bigger players may consolidate their mining power. This may counteract Bitcoin's decentralized character by centralizing the network. Additionally, when traders and investors process the news, the market may become more volatile as a result of the halving. Prior to making any selections, like with any investment, it is crucial to do extensive research and comprehend the possible risks and benefits. This is it for today's video. What do you think of our video? Comment below with your thoughts and let us know. Don't forget to like and subscribe to our channel for more future updates. Thanks for watching.